We'll throw to Tony then.
Thanks, Matt. Good morning, everybody. Well, Friday, we saw US stocks finish a little mixed, which came after Thursday's thumping rally and the 50 basis point rate cut by the Fed. We did see all three key indices finish in positive territory. The Dow Jones up about 1.6% was the best performing, while the NASDAQ up about 1.4%. We saw the Fed speakers come out of that blackout period, and Christopher Waller, who seems to be leading the thought process there on the Fed at the moment, along with Powell, said he backed the Fed's 50 basis point rate cut, noting that inflation was decreasing faster than had anticipated and indicating future rate cuts would be data dependent. But he is open to another 50 basis point rate cut. So that keeps things interesting into the November meeting. What we do know is that the Fed's rate cut last week has slightly reduced the immediate importance of incoming data. Obviously, it takes a little bit of a time for these rate cuts to filter through, but there's still going to be good interest in this week's data. We have flash PMIs coming out and, of course, core PCE inflation figures, which we know are or is the Fed's preferred measure of inflation. So we'll be keeping a close eye on that. And in the short term, we're going to be watching to see what the US economy looks like, because we know that the GDP now forecast for quarter three, which the Atlanta Fed puts out, puts growth on a pretty robust 2.9%. So with that in mind, when we've seen the Fed cut rates over the past 40 years, the 5 times where a recession hasn't followed, the S&P has been 17% higher over the subsequent 12 months after that first Fed rate cut. Now, bringing things closer to home, we saw the ASX 200 obviously dragged higher by events on Wall Street, and also the labour market data in Australia was firm, but not firm enough to see the RBA act on its hawkish bias at this week's meeting. So we do obviously have an important week here. Tomorrow sees the RBA board meeting, expected to see the RBA keep rates on hold at 4.35%. I think it will probably retain its hawkish bias. It just doesn't want to move away from that, because we know that the following day, core inflation is going to remain rather sticky at around 3.7%. That said, we will see headline inflation move significantly lower because of those government rebates. So we're actually going to see headline inflation move back in towards the RBA's target band. So it should be around 2.7% there. But again, the one we need to be mindful of is core inflation, and that is just still too high. Nonetheless, the Fed has cut rates. We saw a dovish BOJ last week. Potentially, there's a bit of disappointment around this morning because the PBOC didn't follow suit. So we've now got the Chinese currency trading at its highest level there in about 16 months. But again, looking for better news from the Australian inflation outlook, and we still see healthy rate cuts priced into year-end here in Australia. Last but not least, Bitcoin, well, it's on track for its second consecutive weekly gain of around 7%. Now, it obviously is a risk asset, so it got dragged higher by that 50 basis point rate cut, as well as the improvement in risk sentiment, which we have seen in recent weeks. After holding that 52,000 to 50,000 support area in early September, we moved to a positive bias there, looking for it to hit the 200-day moving average. It's now done that. We will move back to a neutral bias in Bitcoin and potentially look to buy a dip back towards that 50,000 area. Or if it can get above that trend channel resistance coming in around 68,000, that's probably a green light that this correction we've been seeing since March in Bitcoin is coming to an end and that the uptrend potentially has resumed. That's all from me.
Thanks, Tony.